Morning. Today is November 9th, 2021. Day trading recap. I didn't have a good day today. I lost $454, and a lot of it had to do with really not good trading. Well, a lot. I learned something about myself today through these losses. I learned things, and this particular one is one that I have to be very aware of. Very, very, very aware of. But then I also made money on the futures today. I went long here, sold some contracts here, and decided to stop and call it a day. Yeah, because I started getting very upset. Um, but anyway, it all started because, as you can see, I have a very big loss on Apple, which my losses should never get this high, and neither should they get this high, because my risk is 100, and this means that I did something wrong, and same here. SPY was just FOMO and stupidity. This was not a. This was. It's funny when your trade is up to $400 and then you exit and you only take half of it. But a lot of it had to do with really just bad emotions, bad planning. Yeah, so let's talk about the trades that I took and why I took them. So my first trade was on GS, and I remember when I was in this trade, I I went long here. I actually pulled up. I think I pulled up the 1 minute chart, and a few things that were happening when that happened. You pull up the 1 minute chart. The first thing I noticed was we sold, came down, went up, went up, went up. I think we're up here about, and this is another thing. My exit, I wanted to take $200 from this because it was a scalp. Here we're about 100, but anytime I put the $100 mark, it would mark it over here, went back down and up. It was just hard to read. And you can see these gaps. The problem with GS is these candles don't move, they just appear. I don't know whether it's to do with liquidity, but it's obvious this is not. I actually did this too today, and then I entered more. Yeah, it's obvious this was not a trade I should have taken. So remember I said yesterday, don't trade a 1 minute chart. I did. I didn't even butter an eyelid. Um, so anyway, so I had a stop here, and remember my stop is supposed to be $100. So what I did at first was I entered with with 50 shares. You can say delta of 50 on the contract, and when I did that, the first thing I noticed was I noticed that I actually entered with two. I think I entered with two, and that was the first mistake. Yeah, I entered with two. Then, so when we pull back, I entered with two more. So the two were fine with a stop down here, because we went up, we're going down a bit. This was hovering for a bit. Oh yeah, no, on the yeah. So we kept going up and down on the 1 minute. My stop was supposed to be here. And then we came down. Then I entered two more just to recover back to break even, but I didn't get out because it did go back, and I was hoping we would go back up. Again, that dreaded word, hoping. And that's the thing now. Um, I ended up just putting my stop at 200, and it just took me out. And that's why exactly 200 is what I have as my loss. At that point, I probably should have just gone for a walk, chilled out, sat down, had a think, what is going on? But I didn't. Um, I wanted I wanted the market to do something. I was like, okay, double bottom, we're going up, but that didn't happen, and I got very upset. So what's important is this. Regardless of your convictions, especially as I put these demand zones, I think this is the problem with supply and demand, is sometimes you get this idea that the market is going to do what you want it to do because you have a zone there. That's why I sometimes don't like putting the zones, because they make me, or I find myself, not that they make me, I find myself taking trades I probably have no business doing. I'm making decisions around a zone and not what is actually going on, not around the price action. What should I have done differently? One, stuck to the 5-minute chart. Two, based on yesterday's trade, and what I'm going to do now is I'm going to clear this entire sheet, this entire page. So I'm going to clear drawing set, so we don't have anything kind of distracting us, right? So what is the market doing? And this is the first thing you got to always do whenever you're taking any trades. You got to ask yourself, what is the market doing? What do you see? Right now, I kind of see a triangle forming. Right? Let's forget about what's happening here. I see a little triangle. Then I see this. Right? Now let's show pre-market. We can adjust this. And it looks a bit better. But we see a triangle forming. 1, 2, 3 pushes, breakout, pullback, and now we're in a downtrend. So the market is in a downtrend. And obviously it's easy to say this in hindsight. Looks like now we have a double, well, 1 pullback, 2 pullback, 3 double bottom. Maybe we might go up, maybe I go down. The point is, and I was just saying this to some friends in a Discord chat room just now, where I said that you have to understand the rules of the market. The market always respects certain rules. It only moves in 3 directions: up, down, or sideways. And you have to, and then it always does so within supports and resistances. And you have to find where these supports are, resistances are, and you make your decisions based on that. Find a direction and trade in that direction. It's obvious now when I see it that even when you look, we're trading below the moving average. We're in a downtrend. But of course, when I chart zones, even better here, and I always forget that. When I chart zones, I make decisions based around the zones and not what the market is doing. Let's go to another example. There's a very good example why, and I took a trade on this, Lucid. So you look at this, and I remember this morning before the market opened, I shared in the chat room, and I said, I'm just going to open it up just on the other screen at the moment. I was sharing charts, and I remember sharing this, saying, oh look, I charted these zones, but I was like, oh, look at that, we have a wedge top. I actually think I mentioned that. So yeah, I'm Lucid shorts. This will be my no, that's what I was doing. But prior to that, I don't know if I mentioned it. I didn't mention it, but yeah, I took it short here. This would have made me break even, but I got out around here. I hit the market when this candle came out. Yeah, I just wasn't in the mood. Should have waited for the double bottom and taken my, being break even, and then seeing this, it's obvious what's going on. But anyway, so the point I'm trying to make here is that I'm going to take this out. I mean, you could argue that, oh yeah, but it caused demand here, but that's not the point. You kind of expect that. No, let's take this off, remove drawing, and remove drawing. So don't get me wrong, this is a good strategy. It works sometimes. I mean, I would look at Facebook, for instance, it worked brilliantly there. But would I have taken the trade on there? No, I don't think I would have. And I'll tell you why. We'll look at that in a second. So you can see here, this is the support. This is the resistance. This is a wedge top, pulled back. And you can see we have resistance over here. We sold off, we pulled back again, sold off even more. You can now make a trade decision based on that. You know what's going to happen. You can either go short here if you think that's a good short because of this wedge top. you can go short anyway actually, and put your stop here. I mean, you could bounce here and carry on, in which case you know that that's not a valid short. But whatever the case is, your stop needs to be a valid stop. So here or here, whatever it is, if you decide you're going to stop here, you enter here when this breaks. This would be a valid short. Whatever it is, you have to respect the rules of the market. Here is some support, because as you can see, the price is being supported by buyers over here, and now their stops are being hit. And here we have a breakout, more breakouts, more buyers here, stopped out, buyers on probably on this moving average, on this level, stops hit, we're still breaking out. And then here we have another support region based around this, buyers stepping in, and then we have resistance here, wedge top, selling off a bit, and now we have support here. If you want, you can call it another wedge bottom forming. This is also demand, so you're now in a trading range. Possible you could be going down even further, all depends. But the point is, you need to find these, and that is where you make your decisions from, and also you can stop out better. My next trade was with Apple, and the problem with that too is, again, it was this whole idea of a breakout. I assumed it was breaking out, and so I took a trade, bought too many contracts here, I think about 40 contracts here. It pulled back and I exited, and of course it went back up. I could have exited out. Now we are going to the supply region. This candle is a very good candle to tell you that this is probably not going to be a bull trend day. This is a doji. The next one is a strong bull candle, bear candle, bull candle, and then we're now reversing, and look at how strong our reversals are. Double bottom, but we've moved pretty much half a day's range or a whole day's range. Also, when you look, we have yesterday's high here, or was it here, one of it, but you have some resistance here, so chances are that will be tested. We're in a downtrend, and you really want to be looking for shorts. But what is clearly obvious here is that we're in a trading range. So again, if I take this out and take this out, which I don't need, I'll hold on to this one, and I'll explain why I'm keeping that there. Don't need this, and do not need this. And really all I just need here, if I take out pre-market, is just a marker of what yesterday's high was here. And sometimes it's probably worth plotting resistances just so you get an idea of what you're up against. Yesterday's low, so as you can see, test of yesterday's low, pull up, not exactly a test of the high, but one of the resistances, down, another test of the low. So now big down, big up, big confusion. We're in a trading range, and you could have traded this based on this idea, putting your stops here, putting your stops here, long here, short here. As you can see, we're having wedges down, another wedge up. And then I'm going to talk about why what wedges, why wedges, what do they mean? Anyway, so those are the three trades. Oh, and then one other thing, I took a trade on the ES, and I did it on the futures. Then we'll talk about wedges and why they're important. So I took a trade over here, and I actually bought two contracts here, two MES contracts, and I bought two more over here. Took when we got here, because I knew we were going to test this level. I was trading it on the 2-minute chart at the time, and yeah, so I bought here, I can't remember, somewhere here, and then bought two more here when we got there. I knew, because I just thought to myself, we have a wedge, this is 1, 2, we're probably going to test this level. We may not break this level because I was expecting a third. So I entered the next two here, took out two more, and then another two, and made about 80 bucks. Now, why wedge is important? If you notice, this is a breakout, right? Fine. So the market is in a downtrend, and we are breaking out of another triangle. If we go here, this is a 1 hour chart. We're finding support here, which is actually a demand region, if you want to call it. The market is always moving in trends, like in channels, right? So this is support here, resistance, but this is a support that is angling like that. This is resistance, that's doing that. So a wedge essentially is this, and it's always useful to focus and see how the market is moving in a wedge. It's almost as if traders agree, particularly bulls, once it gets to a certain price, it's too expensive, they give up. No one wants to buy so high because they know they can buy down here, so they wait for the price to come back down, and then they buy again, and the whole thing starts. So watching price action and price move is useful to see, especially when you're counting legs 1, 2, actually this is 3, 1, 2, and 3. Probably make a double bottom, which shows that, okay, bears aren't ready to buy any more, and therefore price starts to go back up. Usually whenever you have a sell-off like this, it leads into a trading range, and you just have sideways before the bears again decide, okay, we're going even lower. You can see they have sold off the moving average, and price is going down. So I guess the point I'm trying to, oh yeah, and then Facebook, we're going to talk about Facebook and why this can be useful. As you can see, I charted this level here, and the reason why I charted this was because even though we were in this channel, I assumed, I was like, there is a chance that we could sell off from here. After all, we sold off here. We have this strong wedge, so it's like 1 pullback, 2. I think it came from the fact that, if we put Facebook in here, it came from the fact that when I was looking at the way price was moving, I was like, okay, we pushed up, down, pushed up, it's a double top, we pushed, 1, pullback, we have actually pulled back on this leg, this is the second leg, and we're pulling back. We probably will never cross that level. If that is the case, then therefore the channel is different. This is the channel. And channel should be redrawn. No, this is a problem with channel, because if you think about it now, this is the support, and that is the channel. There we go. So I'm not sure if what I've shorted. Yeah, and I know why this is not right. This is probably another channel. This is fine, but it's not the channel we're in right now. So I'm going to take this out. That's just the sideways channel. Now this is the downtrend channel. If you're going downtrend, this high needs, if we are still in a downtrend, we need to test this high. That's the reason why I put this zone here. This obviously is not valid, so take this out. Now when you are trading, say, supply and demand in a downtrend, it is important you take the swings and you use the swings. So this is a swing low, this is I guess a swing high. You can use that support for this area, and you now take your trades in those areas, because you can find the tops. That was what was difficult this morning, because when we came here, we're testing this area. I always forget that you've got to remember what it is you're testing. You make your decisions based around what we're testing, not based around the fact that, oh, we have a, loss in momentum and we're going up. No, you have to ask yourself, what is actually going on? What is the market doing? Is the market going down? Is it going up? And here, it's clearly going down. So that's something I learned today. I mean, it's obvious, but how to find the right zones, how to make decisions on where you're going to take a trade. So if you say you're going short here, why? Because you're testing this level, This was the last swing high. You're looking at this one pullback, two. We are definitely in the downtrend because this is the high, this is the low, pullback, broken that low. We're going to definitely have to test this high, and we did, breaking this low, downtrend. And that's how you trade it. Unfortunately, I didn't see it that way. Especially when I was looking at GS. Obviously, I saw it as sideways. Did not see this triangle. I saw this. I thought we're going back up. Did not look at the fact that we did not test. We didn't get higher than this, and we didn't get lower than this. So triangle. These are things I'm going to implement now in my trading. But in a global sense, you can see we have, what's this? No. On a global level, that's the last. I'm just going to put this here. What was this? Ah, there we go. So this is the last swing low. So if we pull back, not that one, this one. So we're going up here, then we're going down. 1, 2, and possibly a third leg down. And that's how you make your trading decisions, because now it looks like we're forming a wedge. I think. I may be wrong. I mean, because, you know, this is just what I'm seeing. I mean, one could argue this is what you're supposed to do and not that, and maybe this is wrong. Yeah, that looks more, that looks a lot more, anyway, yeah, so I think in terms of reading the price action, now I know how I can plan trades better. For GS, all I needed to do was, if I went long here, stop remains where it was, and that stop says we are in a downtrend. Obviously I wasn't reading the price action properly, but now I see it. I should always make those decisions well. Either you wait to see what the market does, or you you trade small. All right, that's my analysis for today and my recap. Okay, where's that thing?